Hello everyone, I'm focusing on the British Museum and the British Museum's fiscal year from 2003 till 2004. This period of time was the part of the period of time that the British Museum was focusing on balancing their budget, and it was actually considered on target during this fiscal year by their auditor John Bourne. And also the museum was close to being balanced by the end of April 2004, which is an important thing to note. John Bourne considered the British Museum for that year a going concern basis, and this is defined as a business that functions without the threat of liquidation for the foreseeable future, usually within 12 months, which I took as a good sign for the British Museum. As well, during this period of time, they focused on cutting costs so that they could have their balanced budget. This included consolidating their storage space, which put some of the artifacts at risk in their terms, but that just meant for the most part that their collection was stored in a crowded place. As well, there was also close to 100 staff being cut that year, and money was allocated out of capital funds and expenditure, which I believe was probably put towards paying off debts so they could have a balanced budget. As well, it's important to note that the museum was recovering in some regards. According to the auditor and the trustees in the financial report, there was a lack of visitors that year due to the SARS outbreak as well as the Iraq invasion. I'm not sure if I buy both of those reasons, but it seems to apply for their financial report. As well, some of their trust funds were still rebounding from a downturn 2 years ago, which would have been 2001, 2002. And as well, they reinvested their trust funds in January 2004. So they were still in the process of rebounding and making back some of the money that was lost in financial downturns before. For the British Museum's 2003-2004 financial year, their income amounted to almost £57 million. The main source of income was what is considered grant and aid on their financial report. This is just funding coming from the government alone, specifically the Department for Culture, Media and Sport. As well, a large portion of the funding for the British Museum comes from commercial trading activities. So this would be them playing the stock market a little bit, as well as receiving income off of many of their trust funds. Some of the more interesting trust funds that they have, like their unrestricted ones, include the Shaw Fund. And so this is a residue of the estate of George Bernard Shaw to be used for the general purposes of the museum. As well, it also has funding for the British Library, and the funds were split in this current financial year. I found it interesting that so little of their income comes from sponsorship, but I realized that this is probably because it is a government museum. It's publicly funded, and to get any sort of sponsor, they have to be vetted through the museum and be held to a high standard. As well, there was less income for the 2003-2004 financial year than the year previous. This might just be changes in the government, changes in the economy. One of the big changes in funding comes from grant and aid. So there was probably an election and funding was switched around. For the 2003-2004 financial year, the British Museum spent just over £55 million. The majority of their money went towards what they considered costs and furtherance of the charity's objectives. I assume that this probably means spending money towards programming, collections, exhibits, things like that, a way to brand the British Museum in a way. Also, a lot of their funding went towards commercial trading activities. I found it kind of interesting that the British Museum spent just over $15 million on getting money this way. So again, as mentioned before, through playing the stock market. And they only received just over the amount spent on commercial trading activities in their income. So I'm not sure if it's really a cost-effective way to spend their money in regards to that. Also, the British Museum spent more money than the previous year. I think this probably relates to the fact that their budget is close to being balanced, so they felt more comfortable spending this money. One of the big costs that aren't on the pie charts here is the less depreciation allotted to capital funding. So these are negative amounts that are taken away from the expenditures and put towards other reasons. I think this amount probably goes towards paying off their debts because they are working towards a balanced budget. For the 2004 fiscal year, it was £7.5 million, and for the 2002-2003 fiscal year, it was £8.2 million. For the 2003-2004 financial year, I think the British Museum is actually doing okay. Although they managed to hide a lot of things in their financial report, like their staff costs, they don't actually include that in their main expenditure costs for the year. And they also don't include the cuts to staff numbers. But they seem to be doing okay otherwise. They are paying off their debts, which is important, and they do end up balancing their budget completely in the 2004-2005 year. I originally had looked at the 2004-2005 year, but because that document didn't have the reports attached to it, I wasn't able to analyze it properly, so I decided to do the year before. As the auditor said for the British Museum, he isn't really concerned about what the museum will do, or how the museum will do, even if there's funding changes, and I have to agree with him. The British Museum was on the right track in 2003-2004.